Welcome to Markets Now. I'm Michelle Rook with Brian Grete, a pro farmer, and we did see mostly higher price action today, with the exception of parts of the soybean complex. And Brian, let's talk about the wheat market. It was kind of the leader here today. Is that just still fund short covering, or is the market putting in some risk premium, geopolitical or otherwise?
Yeah, I think they are building in some risk premium. Seasonally, the wheat market is relatively strong at this point in time. You know, we're past winter wheat harvest. We've got the final crop estimate out of the way, and so now what we need to develop in that market from a fundamental standpoint is better demand, and we've seen it improve a little bit, but nothing earth shattering, and nothing to the point where it would make the funds want to be aggressive buyers, and so the geopolitical front is kind of leading it at the moment from a price perspective, and we'll have to see. Those types of things are tricky because you never know how long they're going to last, how price influential they'll be, and so they just aren't steady enough and constant enough to say, well, that's going to drive the market higher, that's going to drive the market lower.
So for at least the time being, then last week's holds or last week's highs are going to be hard to retest.
Well, I think if we do retest them, the key is then if we take them out, then you can build some technical buying interest, and so it's critical not only to the upside but also the downside. So that near term resistance for bulls, if they can clear that, or the near term support for bears, you know, if that isn't defended, then we could face some price pressure, extended price pressure.
Corn market a little bit higher. Did it follow wheat today, or are we still seeing some fund short covering because the funds have gotten out of a lot of their massive short length there?
Yes, they have, and you know, across the grain and soy markets, I think it's critical. The money flow is definitely a price factor, and so we saw it on the big move down where the funds just kept piling into the short side of the market, and market prices just kept bleeding. Well, in August that changed. We bottomed. We saw the funds start to cover some short positions, and so money flow is going to be very critical, I think, as we move forward here.
Do the funds have enough of a reason here to go long in this market? Do you think they're almost flat? And what would the catalyst be to make them go long?
Yeah, so I don't think that there currently is something that would be a catalyst to make them want to go long. Just based on the calendar and how it falls right now, I think the most likely would be South America, but we're still early to trade South American weather because basically once they commit to that, then that's something that's ongoing, and we're still very early in the growing season down in South America, just getting started with planting of the soybean crop in Brazil. Haven't really started yet in Argentina, and so it's early for traders to commit to trading South American weather, especially because we have La Nina like conditions, but we don't have La Nina in place yet. And so probably too early, but that's the next most likely thing that could be a price driver.
Soybeans held support on Monday that needed to be held, but soybean meal has been a real drag on that market. If we continue to see a correction in soybean meal, can soybeans hold together?
Well, probably not, to be honest with you. I think that if we continue to see a sell off in soybean meal, and that's, you know, just been the past couple days here, but it's been sharp and it's been aggressive and it's been an influence on the soybean market. And so if meal continues to bleed, then you will see more price pressure on soybeans, in my opinion, near term. I think 320 is probably the near term mark to watch from a technical perspective for December meal. Now, seasonally, this is the time that meal typically bottoms, and if you want to get some coverage in place, it's a very good time to buy and those types of things. So keep that in mind. But from a short term perspective, meal is ugly and it's pulling soybeans lower.
Yeah, and unfortunately, Brian, the funds are still very long in that market, unlike the other grains, right?
Absolutely, and so that's your risk is that, you know, just from a sector standpoint, let's say they cover shorts in the other markets, and they get out of length in the meal market, and so that, gives soybeans kind of a confliction, in terms of where they wanna focus their attention.
And you think it's a little bit too early to be concerned about putting weather premium in just because of Brazil? I know that they do have some forecasted rains this week, and how important are those?
Well, from a short-term perspective, important. Give enough moisture probably to accelerate their planting a little bit. But we're really early. I mean, we're talking less than 5% of the soybean crop is planted in Brazil at the moment. So it's really early to start trading a weather market down there. If we roll the calendar forward a month, and we're talking about early to mid-November, and we still have the same dryness, and we still have a really delayed planting season, and those types of things, then I think the market gets more concerned at that point in time.
Mhm. We are also going into the WASD on Friday, and I got to ask you, since we've basically rallied here contra-seasonally going into this report, and maybe we see an adjustment in yields, what do you see as the risk here in this market going into that WASD report?
Well, probably the risk from a bullish standpoint would be that the estimates get bigger. The USDA goes up from where they were in September for corn and or soybeans, and just casts a negative shadow over the marketplace. If USDA comes in lower, like most are anticipating will be the case, then you can give it some more price support and those types of things. But if we get bigger crop estimates, that throws a curveball and goes counter to what everybody's thinking because of the poor finish to the growing season, the heat, the dryness, everything that we've experienced basically from about mid-August forward. Has the expectation that these crops have probably topped out, and we'll see smaller estimates.
Very good. Cattle market, very resilient. We did not retest last week's highs, but we still did close higher, and we had 4 higher weeks of higher cash trade. Can that market keep going here or not?
Well, the cash market, and I think I've talked with you about this, it's kind of 3 to 5 week cycles in terms of weakness and strength. And so we, like you mentioned, 4 weeks in a row of cash strength. We're getting deep into that 3 to 5 week cycle, and you're probably getting close to a short-term top in the cash market. With that said, probably several weeks of price pressure once we do top it out. But I just don't see a lot of downside risk in there. The supply side, we all know the supply side fundamentals. The cash market's well supported. The good news on the demand side is that the consumers have continued to eat beef, and while there's been some switching in terms of what they buy, and restaurant sales have suffered and those types of things, grocery demand is still strong, and so that's given us underlying support from a demand perspective.
Yeah. And on the futures board, the funds have continued to add to their long. Open interest has been going up. So is it possible they could defend that long position here?
Oh, they could defend it. I think the risk in that market is that they're overextended to the upside. They pull out of some of those, liquidate some of the long positions, and you do face some price pressure. I'm not once again. I think that there's good underlying support in that market, and so I don't see an extended period of price pressure. But just from a short-term cyclical time frame, I think that we're probably close to tops, and we'll pull back just a little bit here.
That doesn't mean that you're ruling out that we could retest the all-time highs at some point down the road, though,
Oh,
right?
I think that's definitely possible. Late this year, into early 2025, I think that we could make a run at the all-time highs, and so uh, a lot of it's probably going to depend on demand because we know from pretty much what we're getting from a supply perspective, and that's kind of priced into the marketplace. But how the demand holds up, I think, will be critical for cattle.
The hog market also ended mostly higher after some early pressure. That market has been so resilient, and we've seen a contra-seasonal rally. Is that going to continue or not?
Well, seasonally, no, it won't, and I feel like we're a little bit overextended to the upside on a short-term basis, and so we're probably at the point where we're going to see more seasonal sustained pressure as we move through the end of the year and into early 2025, and so that's the risk from the hog perspective right now is that we've had this really nice rally. It's extended further than most people thought it would, and we're probably close to a top, and then the risk is that you face extended seasonal price pressure.
Yeah, because the numbers will likely go up from here from a supply standpoint, right?
Well, the Hogs and Pigs report said we're going to be really heavy, basically from now through the end of the year from a slaughter perspective, and then back off pretty significantly. Still above year ago, but back off quite a bit. And so we'll have to see. The H&P report hasn't been the best predictor in terms of market hog supply from a short-term perspective, and so that'll be something to watch as we move into the winter months.
Thanks as always, Brian Grete with Pro Farmer. That is Markets Now.